May profits be upon you. Welcome to another weekly market forecast. We're looking at the S&P 500 futures. The S&P 500 futures. All right. We're at the monthly time frame. Listen, this week on the economic calendar, the one that pertains to this particular asset is Wednesday. Federal funds rate. That's the FOMC. All right. That's the interest rate decision in the U.S. And it could have a pretty crazy effect on the markets. All right. They're expecting a 0.25 basis point hike. All right. But it's the comments at 2:30 Eastern Standard at the press conference that you want to pay close attention to because they may say we might have to do a 50% raise in the next one after. You don't know. We got to see what Jerome Powell and the crew say. All right, so S&P, we're looking at the monthly time frame. What I want you to notice is we have a clear impulsive move up, a correction, and then a new impulsive move up. This is the break of structure. This is our low. This is our high. This becomes this high here. This break of market structure becomes our area of fair value. This is our natural area of demand. All right. We wait for price to come back into that natural area of demand. The correction to that impulsive move out, that breakout move, we wait for it to be corrected, find support for higher prices. That's what we're looking for. And in that leg, that new impulsive leg up, we're looking for a price to come back and find an area where it could find that support. And we have a bullish fair value gap here. All right. And we also have the overlapping the breakout, the break of market structure here. So when it intersects at that swing high with the fair value gap, it's a pretty good area to look for look for price to find support and then move higher in an uptrend, a higher high, higher low uptrend. Got it? All right, but that's going to be months away. All right, so but we see but we want to get that general big picture, right? That's why we look at the monthly. On the weekly, what do we got? All right, we see that bullish. Thank you. We see that bullish move up. We see the break of market structure here. All right, we see price did come back to that break of market structure, find support, and move higher. All right, so now we get to get a little closer into get a closer view of that picture. And what we got here is price produces this high and then comes down and pushes higher. All right, I like this as a CISD, a change in the state of delivery. Price moved down and then continued bullish. All right, and I like the fact that price did revisit this breakout area with this candle here, and we found support with the next candle. It pushed back up, and then on last week's candle, this is the weekly time frame now, we see that price closed above the high of the previous weekly candle. That indicates that price will likely open in the new week that is coming and trade towards that high, the high of the previous weekly high. Got it? So I am bullish. I have a bullish outlook. Now we're going to look inside this candle in a lower time frame to see if price can pull back into an area inside of this candle that we can find some structure for it to find support for higher prices. All right, let me get rid of all of this because we're going to take a closer look. All right, this is the daily time frame. You can see that there is a fair value gap open right there, right? That's a daily fair value gap inside of that candle that I was just describing, right? The problem I have with it is it's not all the same color. 3 candles make up a fair value gap, all right? I would like them to be all uniform, all right? When one's a different color, those kind of fair value gaps don't hold up as well, all right, as well by a small percentage as one that has all the same colors. That's all I'm saying. So I'm looking for extra confluences that'll strengthen the argument that this fair value gap will hold as support. Got it? All right. We also have this fractal high here that uh, that price pulled back from and then pushed higher from. I like to see that dynamic happening. See, because you had two down close candles here, right? Created that nice area of fair value with this swing low, and we have this impulsive move out. So this becomes our natural area of demand, and you wait for price to come back in here to find support for higher prices. But it may happen here. Okay, this is a bigger time frame look here. This is a bigger time frame look here. All right, let's see. Let's take a closer look inside of this dynamic right there. We're going to the 4 hour. And what am I looking for? I'm looking for, do we have support for higher prices in this Thursday candle, not the Friday closing candle for the week, the Thursday. All right, the Thursday candle. And what do we have? Let's get rid of all of that. And we can see clearly, one, we have a bullish fair value gap. It's untouched. That's a pretty good signs right there. And then we have this fractal high that intersects the fair value gap. All right, this is the breakout area that allowed price to go higher and cause this market structure shift here. Boom, 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 up higher. So we wait for price to come back to find support in this overlapping confluences here of support. Got it? We got that swing high going into that fair value gap. I like it. I like it. All right. This is a buy the dip situation, in my opinion. Now, again, I'm going to point it out. We have this fractal high, we have the fractal low, we have the fractal high here. I'm sorry, this is the breakout. This is the break of market structure. I'm sorry. All right. We have the fractal high, fractal low, and the fractal high. We have the market, the market structure shift, or the break of market structure here. So this becomes our natural area of demand, and it is overlapping the fair value gap, which is untouched. And from that high, if price pulls back into this area, I'm definitely looking for price to find support for higher prices. This is also how you mark your premium and discount areas from the low to the high. Swing it over here. All right. And this is your 50% equilibrium of this trading range. The premium prices, this is where you want to take your shorts. The discount prices down here is where you want to take your longs. You want to take your shorts from premium, you want to take your longs from discount. And when price comes back below that 50%, that it is now in premium prices, discount prices, and we want to take that to the highs. Got it? I threw a bunch of stuff out there at you. I'm hoping that you caught it all. I hope you find that my videos are helpful. If you do, leave a comment, leave a boost, and or a thumbs up. Make sure you check out the next video I'm going to put out, which will be in the NASDAQ. I'll see you there.